Hey everyone, welcome back to Corporate Decoder. Today NTRB just filed an 8K, and I am noticing something interesting about their financing. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals a new credit line that could significantly impact how NutriBand funds its development. So what is the big news here? NutriBand Incorporated, a company you might know from their common stock trading under NTRB and warrants under NTRBW on the Nasdaq, has entered into a new financing agreement. The filing date is the 1st of June 2026, and it is all about a material definitive agreement. This means they've signed something important that could really move the needle for them. They've amended a 3-year credit line facility. Now, this isn't a brand new facility, but an amendment to an existing one. What is crucial here is the amount. It is a $5 million credit line. This is replacing a previous $5 million facility that was set to expire in July 2026. So, they're essentially renewing their access to this funding. One of the most important details for us as investors is that this credit line does not give the lender the option to convert what they've loaned into NutriBand's common stock. This is a big deal because it means no immediate dilution of existing shareholders' equity from this specific debt. Forget about them turning debt into shares, which can really hurt the stock price. We've seen similar situations with other companies where lenders could convert debt, leading to significant share price drops. For example, when companies like Kodak had to raise capital in tricky ways, lenders converting debt sometimes led to a further 40% drawdown in stock value over a few months. This seems to be structured to avoid that immediate headache for NutriBand shareholders. So, why is this $5 million credit line so important? It is earmarked to fund the company through critical stages of development and production for their patented lead product, AVERSA Fentanyl. This is an abuse-deterrent fentanyl transdermal system, which is a fancy way of saying a patch that delivers fentanyl in a way that makes it harder to abuse. The funding is meant to carry them through the FDA approval process and all the way into commercial scale manufacturing. This tells us they anticipate needing this capital for significant operational expansion and regulatory hurdles. The exhibit details an amendment dated the 1st of July 2026 to a credit line promissory note originally dated the 13th of July 2023. This indicates they are proactively managing their financing well ahead of the original expiration date. Now, let's consider the broader picture for NutriBand. They are listed as an emerging growth company, and they've elected to use the extended transition period for complying with new or revised financial accounting standards. This is something many smaller companies do to ease the burden of adapting to new accounting rules, but it is worth noting their common stock NTRB trades on the Nasdaq, and their warrants NTRBW also trade there. This means they are a publicly traded entity subject to CSE regulations, with a current price around $1.21 and a 52-week range between $0.8 and $4.5. The stock has seen some volatility. We're also seeing some sizable institutional ownership, with Citadel Advisors LLC holding a significant chunk, about 12.8%. Clear Street Group Inc. and Empery Asset Management LP are also on the list. Looking at the context from recent headlines, there is a lot of focus on their institutional confidence valuation, dividend history, financial health, and risk assessment. This new credit line fits right into the financial health and risk management picture. Having this $5 million facility secured and extended provides a cushion as they navigate the complex and expensive path of FDA approval and scaling up production for AVERSA Fentanyl. Without the full financial statements directly in this filing, it is hard to dive deep into specific numbers, but the story here is about securing capital for a critical product. This kind of financing is key for companies in the pharmaceutical or biotech space where R&D and regulatory approval can be a long and costly road. Think about companies like BBB or Rite Aid that have faced significant cash flow challenges. NutriBand seems to be proactively addressing that by locking in this credit line. The fact that it is for a specific amount and duration, and importantly, without dilutive conversion rights for the lender, suggests a carefully negotiated deal designed to support their growth without immediate shareholder dilution. My biggest concern with companies like this is always the execution risk. Having the funding is one thing, but successfully navigating FDA approvals and commercializing a new drug delivery system is another. However, this credit line is a positive step in managing the financial aspect of that challenge. What I am actually looking for is to see how they deploy this capital and what progress they make on AVERSA Fentanyl's regulatory journey over the next few years. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.